How's it going, everybody? This is Marshall back with bids and offers. I wanted to make this quick video showcasing a trade that I took today on the E-mini S&P 500 futures by getting long down here at these 54.48s and getting out up here at these 54.75s for about a 27-point profit on about a 4.5 point stop loss down here for about 4.5 points to these 44s. So I want to show you guys what I saw on my end of the screen on these charts, on the order flow, on the footprint, the tape, the tape, and I want to show you guys essentially my trade thought process. So let's start off with some higher time frame picture. We gapped up and we've been putting in this range from the 54.09s all the way up to the 54.98s. And this morning earlier at about 12:15, this gap got closed. So essentially, what I was expecting earlier was a pullback down into this area. I was going to want to try to play the market back long, back up into the range, because that's where price has been. So I wasn't betting on this gap getting filled, but it would have been a nice trade. So essentially what happened here is we opened up here at these 5500s, and we fell quite a bit at the open. Now, from 932 to 936, we had this little consolidation range that got put in here. And we were wicking up, and each time the market popped, it got shut down by offers that came in lower and lower each time. We fell through this area, and then we popped up from these 62s all the way up to these 75s. And 75s right here, we wicked up to the bottom of this consolidation range, and these buyers could not reclaim this range from the morning. So we came all the way back down here into this area. We're now below VWAP, and we're now developing quite a bit of volume down here at the low of the day, near the low of this entire range. So what I'm essentially looking for is, I'm trying to find ways to play the market back into the center of the range here. If you guys have seen any of my other videos, you know I like mean reversion theory. You know I like finding confluences for good high probability targets and great risk-reward ratios. Well, this trade that I took today, I have my executions over here. You can see I got stopped a couple times beforehand. I took 3 stops today and 1 winner. So essentially what I was looking for down here was a retest of this area right here. I actually got long right here at these 54.54s right in here. The market dipped a little bit, came all the way up, came back down and actually stopped me out. Not for break even. Probably should have been a break even stop, but I got stopped for a couple points there. And then as soon as I saw this low get broken right here, that's this low right here. As soon as I saw that get broken with some selling aggression, and I saw the market stick around just a couple ticks below that low, I saw some bids here on the dome, and I saw some activity that told me that people might want to try and bid the market back up into this range. So essentially what I saw was selling that could not initiate further downside. People were selling into a bid. So when I see somebody selling into a bid, people selling into a bid that's outside of the value area range of the day in an area where previously the market had been defended, if we go down to, actually, you know what, it's up here in the morning. So this area right up here, this low of this balanced range in here, this area essentially where the market had been supported earlier, I want to see if it can get supported again, and it was. So basically, I spotted sellers that were struggling to bring the market lower, break below this low. Little liquidity sweep, liquidity trap there. So I wanted to play the market back in. Now, target-wise, this range that got put in was price was bouncing around through here quite a bit. And then we came down, we retested this area, could not get back in, and then started to create value lower. So what I wanted to see was a retest of this level right here, this high, because I thought that price would probably want to come back up and revisit, somewhat near the opening prices. So what I was looking for were reasons to try and get my entry down here, playing long at these 48s to these 75s. So number one, trapped sellers. I like profiting off of people that are trapped and are not getting paid on their efforts. So I spotted that aggression to the downside, but no continuation. And then this low got reclaimed by buyers, which is great for buyers because if you're buying in this range, you want price to stay in this range. You don't want to start, making new boundary or making, discovering new land and moving all the way away from where you've currently been. So if you were a buyer in here, you saw sellers come down, you're going to want to defend your position. You're going to want to put some bids in here. You're going to want to have some capital behind the defense of your initial entry here. So basically, when I saw this low get reclaimed and I saw some positive delta start to come in here, and a little bit of buying, I hopped in early. I could have waited until I was up here. Hey, the buying is more proven. But guess what? If I got long here at these 54, 58s or these 56s, I would have had a massive stop loss. My stop would have had to be all the way down here below this low if I wanted to get long all the way up here. That would be risking like over 10 points. I don't want to risk over 10 points in this market. Sometimes you have to, but I'm currently trading ES. So, if I can minimize my stops, I don't have to go touch the micros. So if I'm getting long right here at these 48s and I can get stopped down here for 4 points, that's, a reasonable size stop. That's a 6R multiple between my target and my stop. So my stop was about 4.5 points. It was about 4, but I'm calling it about 4.5 because I gave it some wiggle room below this low. So basically, I wanted at least 4 or 5 times my initial risk for this trade. I already got stopped 3 times. One of them was a little bit wider than expected. One of them was a pretty bad loss, and one of them was a pretty alright loss, a good loss because I followed my plan and it just happened. But I really try and eliminate, as many losses as I can. This VWAP in here was a contest all morning. The buyers push above it, the sellers push below it. Buyers push up, sellers push below. This was a problem. This was a problem all morning because this VWAP was being battled between. And I'll show you what the volume looked like as I develop it forward. So this is what the volume looks like. It just starts to get developed in here and in here, right? We get this little low volume node that's put in right near the VWAP. So you're saying, hey, if we keep developing volume lower down here, like when price came down into this area, and we're starting to really seriously show some interest in transaction down here, I might get stopped for break even. I might get stopped. I moved my stop to break even like right about here. But you want to see the volume get developed on the side of the market, it's closer to your target on the other side of VWAP. So sometimes when price is hanging around this VWAP in here and we're not outside of the value area range, or I'm sorry, we're inside of the range, it gets choppy. So what you want to see are people to initiate the market out of this area and start to build some value higher, which is what we see if I click back on this, which is what we see when I bring the cursor all the way over here. You see all this new volume get developed in here. People are starting to willing to do business, a little bit higher, which helps me in my confluence trying to get that high probability target, get it hit and get liquidated for a profit. So basically, I want to talk about this 54.75, the reason for my target here. Now, the reason for my target here is because of this wick right here, this high that was made at 940, okay? 54.75. All the people that were doing business in here, bidding, trying to see this green, this positive delta here, people trying to bid the market here and bring the market back up. But these people got trapped because the market went against them, and then the buyers tried one last final time here, and they could not revisit inside of that range. So what I was saying was, hey, if there's all this selling, if there are all these people willing to sell the market down and bet on lower prices, and they did not allow the buyers to reclaim this range, there's a lot of initiative selling in here, right? So all these sellers, once the market starts going against them, they're not getting paid. Where are they going to put their stops if they started shorting right in here? Where are they going to put their stops? Probably right above this high in here, inside of this consolidation range, saying from a shorts perspective, if price can come up into 54.75 and a half past this high, this previous high that we put in, then the buyers are going to start to be in more control than the sellers. And from a seller's point of view, again, they're going to want to get out of the market. What does a seller have to do when he wants to get out of the market? He has to buy. When you short sell, or when you are in debt, a share or a contract or whatever it may be, when you are in debt, you have to purchase that share or contract back in order to cancel out and close your position. So when these shorts start to see price start to creep back up like this, and we're right in here, right? What are they going to be thinking when price ticks above this high? They're going to get out for a loss in here. They're going to buy the market limit. There are limit buy orders that are sitting in here waiting for my aggressive buyers down here to push through this level and touch those limit buy orders. I already have a contract from these 54.48s. I need to find somebody to sell that contract to. Where are there willing buyers? Right above this high. Okay, this also lines up right in between this 50% fib and this 61% fib on the high of day to the low of day. Okay, that also lines up in this low volume node. These are also pretty commonly retested as confliction points in the market. The reason why there's this little C shape right here is because there's not as much transaction in this area. Okay, people transacted here and people transacted here. They didn't like this range. It's a battle, right? So betting on people trying to push price back up into here, get some of these limit buys hit, and get me out at a market sell, or I'm sorry, a limit sell in here at these 54.75s. You know, if I can hunt people that are willing to provide me liquidity, I'll stay on top of the game. You know, I'm not trying to be cocky when I say that, but it is true. You know, you got to put yourself in the position of, hey, where is somebody else feeling pain? When you can identify where they start to feel hurt and they're starting to think about exiting their positions for a loss, where are they going to be doing that? You have to hunt their liquidity, okay? If there's one thing you could take away from this video, it's that. If you want a high probability target and you want a high probability entry, enter somewhere price doesn't go very often, and exit somewhere price is likely to go back to, okay? It doesn't matter if you're shorting or you're longing. You don't want price to stick around your entry. You don't want it to stop you out. You want to have conviction and timing behind your confluences to enter the market. And you also need confluences and reasons as to where your target should be. Yeah, that is pretty much all I've got regarding this trade. I can't actually go back on the tape because something's messed up with my tape right now. I got to fix the settings. But essentially, this is my thought process for this trade. We came all the way down from these 5500s all the way down to these 50 points down to these 45s. And I was looking for a way to play the market back into the center. And I found a reason down here. Second entry, this low had been broken. There was a bidder. So I was already putting my order in after these some of these buyers got stopped out. And there was a bidder in here that sucked up all of their panic sell orders. So I'm after the liquidation of this low right here. So I'm essentially putting myself in a higher probability scenario that the market will continue and put me in profit on my trade rather than creep back down below this low, okay? I saw selling over here. The selling was pushing. They cracked this low. I saw some buying come in. We started to see this area go like this, and then we jumped back up. We reclaimed above this area in here, and I took the market long. You know, I don't have the most consistent, I'm sorry, not consistent. I don't have the most reliable entry signals, but because I'm getting in so early, I get in so early, my stops are minimal. I make 6 times my risk on a trade when I exit for 27 points on 4.5 points of risk. You know, that's 6R. So I can take that exact same trade 6 times and win once, and I will be break even on that setup. So I hope you guys took something away from this video. I want to show you my exit up here. Price chopped around quite a bit before we came up into these 75s. I got out right here. As you can see, the market jolted up through this area. Lots of zero prints in here. Zero prints are misprints where people are unable to get filled on either the bid, the ask, or both when the price moves through and the market dries up. When the market dries up, that's essentially a thin book. When you have a thin book, aggressive participants can move the market so quickly that sometimes prices get skipped. And that's what this is right here. So price jolted up, out with the 75s, limit order right here. And then as you can see, all these buy stops are sucking up. They're accepting my sell order. So I have liquidity provided to me. I'm providing somebody else with liquidity. You know, it's the way the market goes. The market is an auction. You have to think about it in steps. Where are other people trying to enter the market? Where are they entering the market? Where are they getting out of the market? And how can I profit on when they are feeling stressed or in pain? How can I use mean reversion theory to get long down here, betting on a price coming back into the mean and hanging around an area that proves further value to the upside where I can get out here for a 27-point profit? You know, you just got to think about how, you know, you can combine all these things together for a high probability scenario. You don't have to win every single one. You don't have to take every single setup. But when you find a setup that offers you high probability, great opportunity, great reward on risk, and you have really good conviction and confirmation for your entry and your target and your stop, I mean, you got to take it. You know, you don't get that many opportunities. You know, there's always more, but you don't get that many. And when you see one and everything lines up, don't hesitate to take it. Because if I had waited just another 30 seconds later, price would have already been all the way up in here. I would have tried to get long at these 55s. Where would my stop be if I'm betting on getting out down here? Where would my stop have to be? All the way down here, right? 44s. That's an 11-point stop. That means that, I mean, even if I size my bet correctly with my stop loss, which is like a reasonable thing to do, when the market comes down here and I want to get long late, that's 11 points of profit on probably 20 points. I'm sorry, 11 points of risk on probably about 23 points of profit. That's 2R. That's not that great. I like having 3, 4, 5, 6, 7, 8, 9, 10R trades. You know, I like having great reward on my risk, and I like having high probability situations. So I hope you guys took something away from this. I hope that you guys enjoyed this video. I hope that you find value. Go subscribe. Go like all my videos. go through my shorts, because I posted a lot of shorts and a lot of stuff on my Instagram at Bids and Offers, showcasing a bunch of setups that I take, offering informative posts where you will not find information like this really on any other page, because a lot of people are spewing a lot of BS out there right now, and you really want to be on the right side of the market when it comes to information these days. So thank you guys for watching. I really appreciate all the feedback that I've been getting. I really appreciate the support, and I'll have another video coming out soon. Thank you guys, and if you have any questions, leave them in the comments. I'll respond to every single one. Don't hesitate to DM me. Don't hesitate to ask me anything. I'm here for all of the order flow questions and my trading questions. So thank you guys. I hope you have a great day.